Hello and welcome to our latest Insider interview. Today in the studio I have with me Lawrence Burns, Deputy Fund Manager of Scottish Mortgage Investment Trust. Lawrence, thanks for coming in today.
Thank you for having me.
So Lawrence, Scottish Mortgage invests in various themes. Could you provide an overview of the key areas of focus at the moment?
So I think one of the advantages of Scottish Mortgage is that it's exposed to a wide variety of mega trends around the world. One of the big ones of those is obviously AI, where we have exposure at the hardware layer, the infrastructure layer, and the application layer. But again, it's the diversity that really matters. Our largest holding is about the future of the space economy. We have holdings that are exposed to the revolution in digital financial services, such as Revolut, operating primarily in Europe, Nubank, operating primarily in Latin America. And we also have investments in companies that are really at the pinnacle of luxury, with Hermes and Ferrari. And so there's a wide variety of exposures. Energy transition would be another one, where we own BYD, the world's largest electric vehicle manufacturer, CATL, the world's largest battery manufacturer. So I think what is really interesting about this position that we're in right now is that there are so many changes of profound growth potential that we're seeing.
Could you put a figure on the amount of exposure Scottish Mortgage has to artificial intelligence? And could you provide a bit more of a flavour of the types of companies that you own?
I think any figure is going to be somewhat misleading. So I'm going to take a step back and try and explain that. If you look at AI, I said before, three levels of exposure. So you take the hardware. We own Nvidia, which designs the AI chips, GPUs. We own TSMC that fabricates chips, and we own ASML that provides lithography machinery to help that fabrication process. Nvidia isn't even 100% AI, but it's mostly AI. TSMC, maybe around 20-25% at the very most of their revenue is going to be AI accelerators. The rest of it is that it has a 90% share of advanced chip manufacturing of all types of chips. And similarly, ASML supports that. So even there, none of the companies are necessarily, certainly with TSMC and ASML, 100% AI. As you move to the infrastructure level, you have Amazon Web Services, where a big driver is, of course, AI, but Amazon Web Services is also not just about AI, and there's also Amazon Retail that focuses into that. We have a holding in Anthropic that's an AI frontier model company. That would be 100% AI. If you move on to the application layer, we have some companies that are using AI at the core, Aurora for autonomous trucking, Horizon Robotics for autonomous passenger vehicles. But a lot of the companies at the application layer are companies like Spotify, global music streaming giant, where we invested in 2014. Our investment case had nothing to do about AI. We just think it's a great business of a growing market opportunity. AI makes that business better by improving the tools that are available to users, improving the cost space, but it doesn't make the investment case. It's an additional optionality. And we have a lot of companies where AI isn't a core part of the investment case, but we think AI could make them be a better business. And so that's why giving a percentage figure, I think it depends, percentage of revenue, percentage of value, it becomes quite tricky. But I think when you take a step back, we feel that we're well exposed to some of the positive trends around AI, but without it dominating the portfolio exposure.
Artificial intelligence has plenty of future growth potential. However, there are concerns about the amount of money that the world's biggest businesses are spending on artificial intelligence development. What's your view on that?
So the figures are staggering. I think a lot of them would say $650 billion spent by the hyperscalers in 2026 is the latest estimate. That seems staggering until every company you speak to starts telling you how important AI is becoming for their business, whether they're a bank, whether they're a digital platform, whether they're a company in manufacturing even. And they start telling you, actually, we think this is going to potentially accelerate our revenue or help us reduce cost. And what you see is that actually there's a supply constraint. The problem is not demand here, the problem is supply. Last year, we took a holding in Anthropic, leading frontier model company. Their journey really typifies just how much demand there is for AI as a product, as a solution, as a service. At the start of last year, they had a revenue run rate of about $1 billion. They're thought to have exited this year, 2025, on a run rate of about $9 billion. OpenAI have numbers that are even higher than that and are also growing very fast, and that's just two of the AI model companies. So what I would say is that There is huge demand for these services and products. This is a real technological revolution that is being monetized today. But at the same time, every big technological build-out has bumps along the way, and we need to be prepared and recognize that, but at the same time not dismiss that this is probably the most important technological development of our lifetimes.
And is it also important to scrutinize how companies are spending the money on artificial intelligence developments and whether that money is being spent through debt?
I think that's helpful when you're thinking about the overall sustainability to look at that. But I think if you take a step back, who are the companies that are spending the money on AI? I mean, a lot of it is backstopped effectively by the hyperscalers, who are some of the most richest and profitable businesses in the world, Microsoft, Amazon, Google. And they see this not just as important to future growth, but an existential thing for them to be investing in. And they're often founder-influenced or driven companies as well. That means that they can focus on the long-term benefits of that investment.
Scottish Mortgage has a long-term investment horizon. Could you talk through the typical portfolio turnover, and could you run through recent portfolio activity over the past couple of months? Could you outline some of the newest holdings in Scottish Mortgage?
Yeah. So portfolio turnover is about 10%, and that obviously implies an average sort of 10-year holding period in line with what we talk about, that 5 to 10-year time horizon. In terms of recent purchases, give a couple of different ones. Rednote is a Chinese company. We don't have something quite like it in the West. It's a combination of, it's like a social community. It's a combination of Reddit. It's a combination of TikTok. It's a combination of search. It's got a growing user base, excess of 350 million monthly active users. It's under-monetized and it's growing very, very rapidly. It's a private company, and it's also looking to expand internationally, again, because the business model is distinct and different from what we have in other markets. So that would be one new holding in China. Another one would be one that we've touched on, but I think it's worth talking a bit more about, Anthropic. Anthropic has had that phenomenal revenue growth. It's probably one of the fastest growing companies in the history of the world. We really like it because it's focused on AI safety, and that's particularly appealing to enterprises. And so while ChatGPT and OpenAI's ChatGPT is focusing on the consumer market, Anthropic with Claude is focusing on the enterprise market. And I think at the end of the day, that's one of the markets that's going to get the most use out of AI. It's not about generating videos or asking Q&A questions. It's about how do I make my business more successful? And so the ability to monetize that and to monetize the value of cutting edge AI there is really very, very strong. So those would be two examples.
A holding that used to have a much larger position, although is still a top 10 holding, is Nvidia. Could you outline your latest views on the company?
So I think our stance is positive. It's still a decent sized holding within the portfolio. It is central to the development and rollout of AI, where the real question is how many chips can they supply to their customers? And it has a very strong competitive position. At the same time, it used to be a 10% holding. So why have we taken that down? That's because when we went and did our scenario analysis, what we found was that it was very hard for us to imagine a scenario where it was going to be a $15 trillion company. So we've taken the weighting down to reflect how we feel about the upside from here. And if you look through its journey, it really does typify the type of outlier we try and own. We invested about £64 million in Nvidia. We've taken out about £1.5 billion already of profit, and we still have a £500 million invested. And so I think in many ways that typifies the ideal journey of a company that delivers outlier returns, and we've been able to harvest them. And there'll still be more to come, but it just doesn't quite, versus the other opportunities we have, justify the same holding size that we had in the past.
I next wanted to turn my attention to performance. So there's a weak period of performance at the time in which interest rates started rising, and that period of weak performance, it is still reflected in the 5-year performance figures. So over that period, the share price total return for Scottish Mortgage is around 5% at the time of this recording. Now the 3-year performance figures, they're much more favourable. The share price total return is up nearly 80%. Are you confident the performance is back on track? And how would you ask shareholders to judge your performance? Is there a particular timescale?
So what we'd tell shareholders is to judge us over periods of at least 5 years or more. And I think the longer time horizon you have, the more sense Scottish Mortgage makes for you as an investor. So if you zoom out a bit further and you look over 10 years, the numbers are also very strong, up about 430% or so over the last 10 years, well ahead of global indices. You're also quite right that the 5-year period now looks far more disappointing, and that's reflective of it being measured from the peak of our performance back in sort of 21, where you had the COVID period. Fortunately now, as you rightly pointed out, performance, I think you said around 80% over 3 years, is looking very, very different. And I think we're confident that our opportunity set is there, that our edge as investors is there to be able to deliver long-term returns. They'll be volatile over time, but we're very confident about the ability to deliver value for shareholders over the long term. If there was a simplistic reason why, it would be that what we're seeing today is a greater pace of change across the world and across different trends and areas. AI is one part of that, where I think given the changes you're seeing in AI, to have some exposure to that makes sense, but it's also about the energy transition, it's also about the space economy, it's also about digitization of emerging markets. So we're seeing trends, if anything, accelerating and being more diversified than we have before. And that gives us the confidence to be able to provide our shareholders with really interesting exposures globally.
I'm going to next move on to a couple of questions we've had from interactive investor customers on our social trading network, II community. So the first one asks, where do you think Scottish Mortgage should sit in a drawdown pension portfolio? A core holding, speculative or diversified holding?
So I think if we go back of what Scottish Mortgage is trying to do, I think it's really helpful if you've got a 30-year pension and you need to combat inflation, because it's going to give you great capital growth. At the same time, because it focuses on growth, on innovation, its pathway can be volatile. And so I think everyone should have some exposure to Scottish Mortgage, and it should form a core, diversified part of a growth component of that, but it should never be all of someone's exposure. And I think if you take a step back, I think the real importance over the long term is that Scottish Mortgage is giving investors a stake in the future of the economy and an insurance against technologically driven disruption. And I think that's really important for long-term savings and investment.
The next customer asks, what makes Scottish Mortgage a better option than a passive global tracker fund for a retiree, given its volatile performance in recent years?
So I think indexes are great. I think they have some drawbacks. First drawback is that they're created from all the companies that have been successful in the past. They're based on past success. And I think Scottish Mortgage provides two key advantages versus an index fund. The first advantage is that we're hunting for the next trillion-dollar company. And so we're giving you exposure to the future winners, not the winners of the past. The second big advantage is that companies are staying private for longer, and therefore, if you're investing in a tracker, you're not getting exposure to some of the latest AI companies like Anthropic. You're not getting exposure to SpaceX, for example, as the tremendous rise that it's had. And that, I think, becomes a really important missing component from trackers. And so Scottish Mortgage is able to provide both public and private exposure for those future companies. And that, I think, gives two really important differences from what an index fund can provide.
And the final question is regarding Scottish Mortgage's discount. So at the time of this recording, the discount is around 3%. However, its 1-year average discount figure is 10%. The customer asks, what is the board's view on the ongoing discount? Is further action planned beyond share buybacks to close the discount?
I think the view is that this is a trust that should trade at a meaningful discount. And we've been doing a very large buyback program for a long time now. We've spent, since the last announcement, £2.5 billion. And the plan is to continue to have that buyback on the belief that this is not a trust that should trade at a material discount.
And finally, Lawrence, do you have skin in the game?
Yes, I invest in Scottish Mortgage every month, and I've never sold a single share of Scottish Mortgage.
Lawrence, thank you very much for your time today.
Thanks for having me.
So that's it for our latest Insider interview. For more videos in the series, do hit the subscribe button, and hopefully I'll see you again next time.